People are freaking out. Just listen to this clip, and then we'll get into some of the reality of what's going on.
And the bottom line of all this is that we've only started this. We'll be lucky if we get out of this top to bottom only down 20%. I think eventually across the indices, Dow, S&P, NASDAQ 100 will end up being down 25% before it's all done.
It seems like on the daily right now, we're just getting more and new tariff announcements, and I think that's sort of the echoing of what this individual is freaking out about on CNBC. Usually you don't see Wall Street folks freak out like this unless they're Bill Ackman and have massive shorts going on, or they're losing lots of money. I don't know. But let's actually break down this latest sort of tariff announcement from Trump. Is it that big of a deal? Let's look at the JOLTS report. Is it that big of a deal? Is it really that bad? And no. What about CPI and JP Morgan's expectations for what the market might do with CPI tomorrow? We'll talk about that. We'll also look a little bit into history. What does history tell us for the potential of, outcomes on tariff warfare? First, let's look at the JOLTS data. I'm going to give you a simple explanation on this one. First, you need to know that this JOLTS data is January data, which in my opinion is frustrating. Why it takes 6 weeks to get the January data is great. Nobody knows. Slow, like the Bureau of Labor Statistics. Anyway, so it's January data. 75% of this data basically came from before Donald Trump was inaugurated. So it's not really useful at providing us great insights, but it did come in slightly better than expected, which is good. That's what we want. Remember, we are not guaranteed a recession. I don't think that the economy, the stock market is really pricing a recession right now. If you want to see pricing a recession, look at what the stock market was doing in August of last year and where bond yields were. We're in the opposite place. Stocks are way higher, bond yields are way higher. Neither of these are screaming recession at the moment. That could obviously change. The big thing that markets are responding to right now isn't that data is slightly good or slightly bad. Like tomorrow we have the CPI report coming out. We've got, construction job hirings were stable in this report. We saw stable quit rates, actually came in a little better than expected. We saw better openings, slightly better than expected. So overall, JOLTS was great. The problem instead is that the stock market is reacting to tariff news on a daily basis. So what happened yesterday was Ontario and the Premier Ford of the Ontario province in Canada responded on Monday saying they're going to now charge 25% more for the electricity that they export to Minnesota, New York, and Michigan. Now, it's worth noting that this is really symbolic, in my opinion. In other words, it doesn't actually mean that much because most energy doesn't come from Canada for these states. In fact, New York only imports about 4.4% of its electricity from Canada. Minnesota and Michigan have even smaller percentages, potentially less than 1% of their energy is coming from Canada. So, in other words, these tariffs that Canada announced, in my opinion, were really symbolic in nature, right? It's a big headline. Look at the headline. The headline seems dramatic. Ontario slaps 25% tax increase on electricity imports to the U.S. in response to Trump's trade war. And when we see that, we're like, oh my gosh, Canada's escalating. This has like no impact. If 4% of your electricity comes from Canada and you pay $100 a month for electricity in New York, and that 4% goes up by an increase of 25%, that would work out to $4, 25% of that $1, a $1 increase on your $100 electric bill. Just as an example, right? It could obviously be slightly different depending on how it's charged, how it's passed on. Maybe it's a few dollars. The point is, it's symbolic. It's a message from Canada, and we're pissed. Well, you know how it goes when people piss off Trump, and so here's your response. Based on Ontario, Canada. Okay, I'm not going to do that. Placing a 25% tariff on electricity coming into the United States. I don't know why he quotes electricity, but I have instructed my Secretary of Commerce to add, okay, misspelled add there, an additional 25% tariff to now 50% on all steel and aluminum coming into the United States from Canada. Okay, first of all, we get a lot of aluminum imports from Canada, as well as steel. Take a look at this. U.S. aluminum imports from Canada dwarf all other trading partners combined. Now, a ton of aluminum will go for like $24-ish hundred bucks. So if you multiply 3.2 million in imports by about it's actually $25.73 is the current pricing. you're sitting about $8 billion of imports that now just saw another 25% tariff, which is worth $2 billion on top of the $2 billion previously. That's a lot. That's just for aluminum. Aluminum metric ton cost. Let's just verify the cost of a metric ton. Yeah, okay, because a kilogram sells for about $2.50-ish cents. So yeah, okay, cool. Obviously, this fluctuates. It's like it's like the stock market. But then you also look at steel imports, which you can see here. Mexico and Canada accounted for almost 40% of U.S. steel imports, with Canada taking the lion's share of those steel imports for net tons. So this, is offsetting the exports that we do. You can see China way over here. So this actually hits them substantially harder. I mean, 6.6 million metric tons. Let's see, metric ton of steel cost. Look up, metric ton of steel is sitting closer to about $1,000 a ton. So it's cheaper. Puts you at about $6 billion from Canada. Again, now tariffed basically at a level of $3 billion. So these are significantly larger tariffs in response to what Ontario has tariffed us when it comes to electricity. And so looking further at Donald Trump's comment here, you can see that this will go into effect tomorrow morning, March 12th. Also, Canada must immediately drop their anti-American farmer tariff on various dairy products, which has long been considered outrageous. Will shortly be declaring a national emergency. Part of the reason we see other countries sort of tariff, like our dairy at least, is because the U.S. government does substantially subsidize our own dairy farmers, because it's quite frankly really difficult to actually make money running a farm without the support of the government. Also, Canada, okay, we saw that. I will be declaring a national emergency on electricity within threatened areas. Again, we're talking about like $1 of a change here. This will allow the U.S. to quickly do what it can to alleviate the abusive threat from Canada. It's basically trying to say like, hey, go build more generators, solar farms, hydro plants, whatever you got to do. Screw Canada, cut them off. If other egregious long-time tariffs are not likewise dropped by Canada, I will substantially increase on April 2nd the tariffs on cars coming into the U.S., which will essentially permanently shut down the automobile manufacturing business in Canada. Mind you, a lot of these are American companies and American job providers that have portions of their cars manufactured in Canada. The supply chains are very complicated. It's not like 100% of the cars manufactured there. There's so much back and forth trade for parts, for the chips, the small microchips, the not even the smaller nanometer chips. I mean, we're talking about some of the larger nanometer chips, the 27 nanometers or whatever, almost more of like the chips that you see in laundry machines. These chips go back and forth for testing, parts, capacitors from here. It's amazing how integrated the North American supply chains have gotten. The problem is sort of like cutting off all of those veins and trying to protectionist or apply protectionist policies to the United States. And that's why you're seeing so much of a stock market shock, because every business is affected by this somehow. Those cars can easily be made in the USA. Very difficult to turn around, snap your fingers, and just open up all the factories in the United States and the supply chains. It would be almost, to me, it's almost like saying, you know what? Stop going to the grocery store, start growing your own food. You can easily grow your own food. Why aren't you doing it? Well, because it's cheaper to have somebody else grow it in bulk. It's cheaper to manufacture in another country. The infrastructure is already established. Anyway, we're subsidizing Canada to the tune of more than $200 billion a year. Why? This cannot continue. The only thing that makes sense is for Canada to become our cherished 51st state. And we kind of go right back into that, which is interesting because then it sort of leads into this. I want you to hear the sentiment in Canada.
There's someone who's trying to weaken our economy. Yeah, Donald Trump. And Donald Trump, as we know, has put, as the Prime Minister just said, unjustified tariffs on what we build, on what we sell, on how we make a living. He's attacking Canadian families, workers, and businesses, and we cannot let him succeed. And we won't. We won't. I am proud of the response of Canadians who are making their voices heard and their...
Okay, so this is really interesting. This idea of he's getting into Canadians boycotting, basically. So this actually happened in history. This has historical precedent, which kind of makes it a little bit scary because the outcome wasn't great. In 1930, Herbert Hoover signed what were called the Smoot-Hawley, I always screw that one up, tariffs. And they basically increased tariffs from about 40% to 60%. So 40% in 1929 to 60% in 1932. And tariffs really started during the Roaring 20s, mostly because of after World War I, Americans had this mindset of, oh, you know, let's build it at home. Let's focus on America. We just came out of a world war. Let's focus on America. And you did have a Roaring 20s. You had a boom after the war. And so that gave the might to issue tariffs and more tariffs and more tariffs and more tariffs. Problem is, when you tariff in a good time, you get a little complacent. You tariff in a good time, everything's fine. You start tariffing in a weaker economy, right? I'm not saying we're in a recession. I know a lot of people say, no, we're already in a recession. The data shows slowing, substantial slowing, whether it's a company pricing power, earnings, or what's happening in the labor market. It's a signal slowing. But a lot of these can also be lagging, right? Those really turn ugly when a recession is actually ubiquitous and everybody's like, yeah, we're in a recession. Tariffs during the predecessor here to the Great Depression ended up leading to this anti-American movement that to some extent we're seeing now as well. In fact, this, they had a word for it here. Tariffs in the 1930s contributed to exporting anti-Americanism, which led to a drop of 15 to 20% of usual imports to the United States. This ended up contributing, not necessarily leading to, but it was a contributing factor to the depth of the depression that we had from 1929 to 1939. That's a 10-year period of hell. And the tariffs were slowly scaled back. We actually went back to quote-unquote free trade in 1933 thanks to FDR. But it was too late. You still triggered the Great Depression. You spent 4 years with the Great Depression starting, and you were still in the Great Depression for another 6 years after the tariffs were removed. And the problem right now is we don't really have a Federal Reserve that's ready to Fed put us. See, the Fed put is referred to this idea that if things go really bad, the Federal Reserve will flip and bail us out and make everything okay again. The problem with that is we're not really in a place where the Federal Reserve's willing to say, oh yeah, inflation's a non-issue. Go ahead, bail out markets. Federal Reserve instead saying, everything's good. We don't need to give you any kind of forward guidance. If anything goes poopy-doopy, we'll deal with it at that time. But will they? Depends. We got CPI data coming out tomorrow. CPI data tomorrow, I think, will be less critical, probably because I don't think it's going to be a huge signal for anything. But this is February CPI data. We're looking at 0.3 for month-over-month core 0.3. Year-over-year, we're looking at 2.9. Year-over-year core, we're looking at 3.2. JP Morgan thinks that if we get a miss to the downside, as in lower inflation, which technically in inflation terms is be considered a beat, we could actually see the S&P 500 move by as much as 2%. I'll pull up their comments in just a moment. I don't know that CPI, much like JOLTS data this morning, will be very useful. I think what would be most useful for markets right now would be an end to the tariff war rapidly. Because the longer it goes on, the longer you're creating more sustainable pain. And it just compounds on itself. That's how the economy works. People get uncertain, they spend less money, and then all of a sudden businesses are like, oh my gosh, we're getting less income, what's going on, oh no. And it's a cycle. The economy functions in cycles. So the briefing that we have, here we go, from JPM on CPI data. Let's pull that up for us. Here we go. Okay, CPI. So they think if we get a 0.19 or lower on core, we could rally 1.25 to 2% on the S&P 500, but they only give that a 5% chance. Most likely, they think we're going to get something between 0.24 and 0.28, and they actually think you'll go flat to positive, like slightly negative to slightly positive on that. And then on either side, they think we could lose or we could gain a little bit if we're on either side of that sort of 0.24 to 0.28 level. They also think there's a tail risk that could really lead to some poopy doopy if we end up getting a really high read, which would be not great. This would be somewhat similar to what we saw in the first quarter of 2024, where we actually had an entire quarter of higher inflation reads that ended up leading to longer pain in the market through about April, when we finally started recovering a little bit, rallied then into July, and that's when we started having some labor market weakness that really started flipping a lot of opinions in terms of the direction of the economy. So it's interesting. I mean, we'll see what we get tomorrow in CPI, but as far as the trade war continuing, you could see, why did markets get hit today? Well, because Donald Trump's slapping some more numbers on. I don't actually think these additional tariffs are so substantial, but they were enough to shatter some of the early morning run that you had here, and they do reiterate this tit-for-tat war that's going on. And it seems like we continue to move towards more tariffs rather than fewer tariffs. And so that is enhancing some of the uncertainty. So anyway, there's your update for this morning. We'll see you soon with more information. Thanks so much. Goodbye. Good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.